The results were really strong. It was actually Google's strongest quarter probably in a couple of years. The thing that was really interesting was the revenue growth has been on a good trajectory, and they grew revenue 26% this quarter, so that was solid. But the thing that was a change was that the gross margin actually improved sequentially. You know, they've been really suffering from their TAC expenses going up, and that's been weighing on margins. And that it's been going down a lot for the last couple of years, and this was the first quarter in recent memory that you actually had a modest increase sequentially. So that's a bit of a game changer. Now, they definitely called out some things that could be temporary in that, you know, well, the biggest thing is desktop search. So, you know, what's been going on in their business is mobile search is growing a lot faster than everything else, and YouTube revenue is growing a lot faster than everything else, and both of those things weigh on gross margins. Desktop search, which is their legacy business, had been declining and just sort of losing share in the mix. So they called out that desktop search was strong. That was like the second quarter in a row that that's happened.
Meaning showing growth over?
Yeah, well, that was a strong contributor. They didn't necessarily say it grew, but they said, you know, that it was a strong contributor. So you just have to wonder how sustainable that is in this era where mobile is taking over everything.
How much more do they get for ads that are put on desktop search versus mobile?
Well, the rates are similar in terms of like the pricing, but the difference is the cost that they have to pay out on the other side because they pay traffic acquisition costs to share with their partners. And so while the revenue's similar, the margin structure is higher on desktop than it is on mobile.
Speak to what was the big headline of last week that everybody was waiting to hear more about, which was this $5 billion fine from the EU and what it means to the business long term.
So, you know, this is a one-time charge that Wall Street's looking past for now. Google said they're going to appeal the fine, and so we'll see what happens there. And typically, these EU fines over the years haven't really been a big factor. I will say, though, that with the EU also, you know, going after the other big internet companies, and with sort of a general uproar around the tech community, around the data that Google and Facebook have amassed with the user bases, I think that, you know, this time could be a little bit different, and this could be more of a sustainable drag on revenue going forward.
And do you think that's true? Do you think that's true of Facebook? Do you think that's true of everybody?
I don't think it's going to be a big deal in the near term. As a matter of fact, in the near term, these rules are likely to push more advertising share to the big guys because they can more readily comply with the EU.
Well, that's what I was going to say. There is this flip side argument, which is that regulation ultimately is going to protect the incumbents.
Yeah, I mean, it's regulation designed to protect consumers, and we'll see how well that works. But in a, you know, sort of a weird way, it's probably going to benefit the larger companies more so than the smaller companies.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.